Good morning. Welcome back to another Market Monday. Well, we got the CPI inflation number last week, and the tribes immediately started their rallying cries. Let's take a look. Now, remember here, we're in August looking at July's numbers. So here at the top, it looks like we have US inflation slowing to 8.5% in July. Got some inflation cooling. What else? Hopes that inflation has peaked. Okay. Oh, well, here it looks like inflation may actually have been 0%. Guess we have to click here to find out what that's all about. And price increases slowing, inflation easing. Okay. Narrative check says inflation's slowing, but what's this 8.5 versus 0 inflation all about?
Well, it seems a lot of people are arguing over this when it couldn't be simpler. The 8.5% inflation figure for July is the year-over-year change, the traditional headline inflation number we talk so much about. So July this year compared to July last year. The 0 inflation is the month over month. So this July compared to this June, just 1 month earlier. Depending on what folks are trying to accomplish, which tribe they're in, they'll say inflation was either 8.5% or 0% and eliminate as much context as possible. Both numbers are true, just which time frame are we measuring?
We think the more interesting insight is the market seemed to celebrate this 8.5% inflation print for July, whereas the exact same CPI print for March of this year, 8.5%, was met with fear and anxiety. Just look at the narrative around that time. Prices rose sharply, extraordinarily elevated, rises by the most since 1981. So what really gives? It goes back to that rustle in the bushes idea that's baked into our human nature. Rustle in the bushes. Is it a lion? No. Good. A snake? No. Thank goodness. Oh, it was actually just the wind. See, back in March, we were still asking, is it a lion or a snake? Now, even though the bushes are still rustling and inflation is at 8.5%, at least we feel confident that there's no lion or snake.
All right, moving on from inflation, let's take a quick look at the crowd favorite drawdowns table through August 10th. So we have the S&P 500 down 12% for the year, NASDAQ down 18%, and small cap Russell 2000 down 12%. Here's the max drawdown for just this year. So between a quarter and a third of these indexes wiped out, bottoming just about 2 months ago on June 16th. Pretty decent rally off the bottom. This is how much each index has increased from the bottom on June 16th. But as we can see, still with double-digit drawdowns for each of the major indices. There's still a long way to go.
Just to point out, the $10 word for this is called geometric. Geometric returns. Very simply, if something goes down by 10%, it has to go up by more than 10 to break even. If you go down 10 and then up 10, you only get to 99. So as Matt just said, it has been a decent rally. To recover these drawdowns here, the S&P 500 would have to be up 31.5%, NASDAQ up over 49%, and Russell 2000 up about 37%, just to break even. Indeed, still a very long way to go.
Let's take a quick spin around some things that have our attention this week. First up, average gas price, under $4 a gallon. Last time we looked at this a couple weeks ago, it was at $4.50. Going back to that 8.5% versus 0% inflation conversation, gas prices are still contributing to year-over-year inflation. Look at August to August. But would be contributing to month-over-month deflation as we've had consistently lower gas prices for the last 2 months.
What uses a lot of fuel? Jets, planes. Lower jet fuel prices lead to lower airfare prices. Look at this. 2018 through 2021, relatively flat. 2022 in purple looks like a plane taking off actually. Strong peak in June, coming back down what looks like a landing. Hopefully we continue down that path.
And we'll wrap today with jobless claims. We've seen an uptick in jobless claims over the past 2 or 3 months, but we have to look a little deeper. This dashed line up here is the pre-COVID average. So if you just glance at this chart, you may think, wow, it doesn't look very good. But we're still well below the pre-COVID average number of jobless claims. And get ready, this is the same data we just looked at. Here's January through July 22nd, this orange line here. Here's the pre-pandemic line, and here's what we just looked at. Context.
It's all about context. We don't want to eliminate context to push a narrative. We want to provide rich and meaningful context to cut through the narratives and all the noise out there. Hope you enjoyed the video today and have a great week. Thank you very much.